Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, April 26, 2023. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Lots of interesting stuff. Let's start with the most interesting thing. Check out the top. This is slightly after the closing bell. 404.57 by 404.58. That's the bid and the ask on the spiders as I make this video. Now, look at the closing price at 4 o'clock. 404.36. Now, why is that important? Because we've been discussing this particular breakup candle low, 404.55. So they did close below it today. That's an important development. But what they did do also was fill the gap, and they closed above the gap but below the breakup candle low. They're swines. This is how the trick, trap, fool, and frustrate crew leave you guessing at the end of the day. The question now leading into tomorrow, for example, is did they fill the gap and now they're going to bounce back up in a rescue operation format, or did they close below the breakup candle low, signaling there's another leg down coming? First place that leg would go to is the 50-period moving average, right around 402 and change. Figure they're going to spike it a little bit, and there's another gap down here. The closing price is 401.35, so that's somewhat of a zone. Now, all of a sudden, let's do the ifs, the what if. What if they start coming down farther? What if all of a sudden they're into this space in these moving averages? All of a sudden, you remember this is the inverse head and shoulders neckline. Can they come back to test this and still stay above and bounce back up? And the answer is yes. This is a very important place, which is why I left it on the chart, even though somebody out there chastised me before for doing so. He's probably listening tonight. F you. Now that we have that out of the way, what's the bull case? Well, not necessarily a bull case just yet, but what's the non-bear case, which is going higher tomorrow, getting back inside this 404.55 price, and they can start to work their way back up in a rescue operation formation. They would find overhead resistance around that 20-period moving average that will begin to flatten out rather than go up since price is coming down. I got a lot of stuff tonight. Stay tuned. Remember the weekly chart. The narrow week last week, what follows a narrow week is a not narrow week. And here we go. You can see already the chart begins to take a different shape, begins to look different. Now, we have to wait until the week closes on Friday to draw any kind of conclusion based on what's happening. However, this is happening today, so therefore we want to know about it. You have 20-period moving average and a 50 below, just above that neckline that we discussed on the inverse head and shoulders pattern. Did anybody make money today inside the numbers? And I'll give you a hint. The answer is not no. The answer is yes, they did. Inside the numbers, the live room had another bonanza day. Let's see what we have in the early going. You can read the rhetoric, pause the video. We'll get right down to brass tacks. The early look has 407.50 as a bull pivot. It's time for a visual. Right of the vertical is today's activity. 407.50 is the trend line. That was the bull pivot. They need to sustain price above there for more than a few minutes to get anything going for the bull case. That is the pivot. The pivot is overhead resistance when they're below. It is support when they're above. They are important places each and every day. Do you have the pivot? On the flip side, 406.90 is important and a place that opens the door for a test of yesterday's lows and lower. 406.90. Back to the visual. The second line is 406.90. It opens the door for a test of yesterday's low and lower. That did happen. Remember, this is at 0 dark 30. Let's see what else we have as the day begins to get underway. About 9:15, we're setting up the morning trade. That's what this is about. This is about the juicy morning trade. If you participated in the juicy morning trade, post it under the video, go over to Twitter and tweet the thing under my tweet. Here's the bull case. They can get up to 409. They don't have to, but they could. Below 407.50, the door opens for 406.90. We saw that. Yesterday's lows at 406.02. This spot can be support, bounce the tape, and provide support. High risk situation for the aggressive trader. However, now pay attention to this one. The spike, the low, and rip it back up in the other direction thing or trade is 405.45, and there's a zone 90 cents down to 404.55. 405.45, 9:15 in the morning. Just to give you another flavor, 9:33, the buy zone is 405.45. How you doing? That was the buy zone, 405.45, for a spike yesterday's low, rip it back up in the other direction trade. What did we get out of that? A total of about 20 S&P handles, give or take. We knew the exits. We took it all the way up to 407.50. How do you like dem apples? Real profits being had in the room by the participants of the live room. Pause the video, read the notes, go back to the chart to double check the work. It's all in here. Those of you that want to know will actually do what I just said. Those of you that don't give a hoot won't. About stocks on the move, we had a list of 5 today. Solar Edge hit its number. Run hit its number, that's Sunrun. And Microsoft or Mickeysoft hit its number. Let's take a look at the charts. The ones that didn't are off the board. This one, Solar Edge, was a bit of a heartbreaker. Big spread in the morning. We had a couple of traders front run the situation, but here's what happened. The low in this candle was 277.86 against 1 penny lower. Then you can see the second line down here. That's what happened in the afternoon. They ripped it up, and just minutes later, we're at a price of 285 and change. That's quite the rip, coming up 1 penny short. The basic takeaway, the numbers work. How about Sunrun? We got to go down to a 1-minute chart to see this one. Happened really quick, early in the morning. $20.34. They come down, they spike it, rip it back up in the other direction. The high in this candle, 20.69. That's more than the required base hit. The trade was over. They came back down. They did the same thing at the second number. Many traders in the room got them both. It's just like a double play around the horn. And then you could see what happened later on a 15-minute chart. That was definitely a support zone, but those trades were over as fast as they happened. Do you enjoy apples? Microsoft, the number was $299.50. The high of day, $299.57. And the pullback. Pretty remarkable. Even I'm impressed sometimes. The numbers work. This thing was up like 10% at the time. How do you pick the number within pennies on a stock ripping higher on a short squeeze? The numbers work. What's going on over in Camp IWM? We have, just like in the S&P, what's called follow through. Another down day. What's preventing the IWM from going any lower? This reversal candle. Where will they find support within or at the lows of this reversal candle? If they give it up, Irene is coming over. This is the monthly chart. Remember this? We've looked at this many times before, and we talked about it just like this. Are they just testing the top end of the channel when they go up, and they're eventually going to come down and play this bearish, flaggish, wedgish thing to the downside, releasing the energy in the southern direction? Is that happening? The weekly chart below all the moving averages. If she comes down, is she developing a symmetrical move from the large, big down, breakdown candle? Where does that put it? About 160 or lower? Pretty much. The IWM is my favorite market leading indicator. And my second favorite are the folks down at the transportation department. Another tremendous woodshed day, bludgeoning. They were smoked, all that stuff. So I want to show you something that one of you sent me, and I thank you for it. I don't know how many people are watching this, but this is a valid head and shoulders pattern. And here it is. We'll show it on the weekly chart also. Here's your left shoulder, okay? Here's your head, and here is a right shoulder. And they closed below that neckline today. Sometimes they'll rally back and run a test, and if they get back above and close a day above, it's off the table. But If they rally back to the neckline or just fall, either way, what's the prognosis for Team Transportation Department? Well, if you do the actual mathematics behind this type of head and shoulders pattern and what the projected move is, it basically brings you down somewhere in this neck of the woods, somewhere like that. Not going to pinpoint it to the dollar. Doesn't make any difference right now. That's where it is. New lows. New lows. If this played out. Just saying. Put this one on a sticky note. The transports have always been a very good proxy for what's coming in the economy. Stuff that moves around the country, stuff that moves around the world is the transportation department. Planes, trains, and automobiles. Trucks. What about the Q people today? They were actually up on the day because of Microsoft was up 20 bucks. It gave the Qs a huge lift, and they're up a little bit more in the after hours. You've got Facebook, or Meta as they're called, getting a pop on earnings. This was not a recovery today. This is almost an inside day to yesterday. I think the high was a little above the high, 314.97. 314.94. No, so it was actually an inside day to yesterday. Doesn't mean anything. It's just another day in the same area on the chart. We can't really get any solid information from today's activity. They're down a little bit on the week, but they're still eating time off the clock under the 100-period moving average. The chart looks slightly different than the S&P. That's okay. We treat each chart independent of one another. The financials, another down day. You have this pervasive issue, the prevailing issue, the persisting issue about the regional banks. First Republic, I think, was halted today. This chart is heading for bankruptcy land. Whether that happens or not, I have no idea, but that's what the chart is saying. We talk about it every night. There's more out there. They didn't solve the problem. They kicked the can down the road with a temporary plug in the hole. You look at the weekly chart on the XLF and you say, well, is that what's actually happening here? Wrong tool. Is what's happening a bear wedge? Is that what we can derive from what's going on? This big move down, a bearish wedge in a little bit of a channel. And we don't know whether and when it's going to break down, but it could do this and climb a little bit more for a while, another few weeks, or at one point, is it going to pull one of these and release the energy down to 28, 27 and a half bucks. Time will tell, but that is what's under development from a weekly chart perspective. Put that on a sticky note. And then you have Smashmouth. We talked about this price down here around 240, this breakup candle low. The low is 239.78. Yesterday's low, 239 even. And today they get right back above. They're fighting it at present. The high of yesterday is going to be an important place. We don't know whether they'll test it or not, but if they do and they can't get above, the high is 245 and change. They can't get above, that's going to be a problem for Smashmouth. It's hard to unsee this. They should have gotten a little higher and they didn't. That was a choice. This is the weekly chart. That's the number that we've been talking about for weeks. That was a choice not to get there. There are no accidents or coincidences. Is that the market trying to tell us something? This weekly close will be extremely, and I emphasize extremely, important. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.